Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we saw on global markets. The 5-session rally has ended after the US Federal Reserve kept rates on hold as widely expected, citing elevated inflation and solid economic growth while giving scant indication of when interest rates may be cut again. Now, stocks on Wall Street, little changed when the Fed decision was revealed. Investors were perhaps more focused on earnings results from the mega cap tech stocks, with the S&P 500 posting slight losses after crossing above the 7,000 point level for the first time ahead of earnings from Microsoft, Meta and Tesla. Well, to that point, Microsoft delivering a marginal beat on quarterly revenue expectations for its crucial cloud computing business, highlighting growing competition in the industry. Revenue at its Azure cloud division growing 39% in the quarter. The shares plunged more than 7% in extended trade. Meta forecasts its capital expenditure to increase sharply as the social media giant builds AI infrastructure, with the Facebook and Instagram parent expecting annual capex of between $115 and $135 billion. Shares of the company surging 10% in extended trade. And Tesla beat Wall Street estimates for fourth quarter revenue despite the EV maker delivering fewer than expected vehicles in the holiday quarter, reporting revenue of $24.9 billion for the 3 months to the end of December. It also said it had entered into an agreement to invest about $2 billion into Elon Musk's XAI startup. Earlier, SK Hynix, a key NVIDIA supplier, reported a record quarterly profits, and ASML booked its highest ever fourth quarter orders. Well, Seagate Technology shares surged to a record as the hard drive maker recast third quarter revenue and profit above expectations. And Texas Instruments shares jumped after the chip maker forecast quarterly revenue and profit above estimates also. While shares of the gold miners, well, they were up again, tracking that continued rise in the bullion price. Well, persistent inflation, stabilisation of the jobs market and solid economic growth have prompted the Federal Reserve to leave interest rates on hold.
September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%.
The Federal Reserve Policy Setting Committee offered no hint about when another interest rate cut may come, noting that the extent or timing of additional adjustments to the policy rate would depend on incoming data and the economic outlook.
After the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and will continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Well, there were 2 dissenters of the decision, with Governors Christopher Waller and Stephen Myron, who were appointed by President Trump, arguing for a 1/4 percentage point rate cut. Well, US Treasury yields extended earlier gains after the Fed left rates steady. The 10-year up 4 basis points to 4.26%. The 2-year was up to 3.59%. The US dollar held gains against the euro and yen following that Fed decision. The Aussie dollar is higher at 70.4 US cents, having been boosted yesterday on higher than expected inflation and the prospect that interest rates will be lifted at next week's RBA meeting. Well, oil prices have risen to their highest levels since September, as President Trump warns that a US Navy carrier strike group is poised to carry out attacks on Iran if it fails to strike a deal with the US. Brent crude futures up at $68 a barrel. Gold has climbed above $5,300 an ounce for the first time as investors continue to pile into the precious metals amid economic and geopolitical uncertainty. And spot silver also rising to around $114 an ounce, having hit a record high earlier in the week. Copper was up 1%, iron ore up marginally to 104 US a tonne, and Bitcoin is trading at around 89,000 US dollars. Righto, let's get across market reaction to some of those key events we've seen overnight. Ira Epstein joining us from Linn & Associates. Ira, welcome back. Let's start with the Fed then. Any surprises out of particularly that press conference you heard from Chair Powell?
Well, thanks for having me. And no, I think you've probably seen the last Fed cut under Chair Powell The data, we're already at the end of January. He's basically done in May in terms of being the Fed chair. He'll decide if he wants to stay on the board or not. So I don't think so. I think that you're looking at a market that's going to stay stable. Remember what he said. He said that at this point in time, it appears that the market has digested and has gotten through the data of two things, tariffs and the government shutdown. Now we're looking in the United States as a potential another government shutdown as early as this weekend. So they either can make a deal or not. We know that if they don't, we'll see the same thing happen. We won't get a bunch of reports. There'll be uncertainty. People can't make decisions, and the Fed won't make a move in that environment. But I think people have to understand the bigger element that's going on, and it's the debasement of the U.S. dollar. The dollar is falling, and it is a major, major play. And what is going on is the Trump administration always says they want a stable dollar. They didn't say strong, they said stable. U.S. Treasury Secretary Besson said this today on television. What that means to me is they're happy with it slipping down as long as it's a controlled slippage. That is behind, in part, the rally in the metal markets. That is behind, in part, a gradual move up in the commodity markets, which you're seeing, obviously, in two areas. You're seeing that now in the energy market, and we're seeing that in the metals. I can't disagree that the Iranian situation is behind it, but I have no question in my mind the U.S. is not putting boots on the ground in Iran. And the question is just keeping it there, going after their shadow fleet of tankers, and hoping, keeping your fingers crossed, that the people there rise up against the Ayatollah and they create a different type of government. It's that simple. Should we go in and control Iran? We being the United States? Of course not. There's a lot of fury in the United States as to what we're doing in Venezuela. And you're already seeing there that Ms. Rodriguez is now fighting back against President Trump. You're opening all kinds of cans of worms. The people have to decide in the countries that we do something with to do other things with it. And that's the key here. So I think the commodity play, and you're seeing it play out in gold and silver, is there. The energy market, it's not that all of a sudden there's massive demand, it's the low dollar, and that's supporting the grain markets to a degree as well.
Would you be chasing gold here or not?
I'm sorry, I didn't understand that.
Would you be chasing gold given, it's continued to rise? I've asked you this question before, you said no, and it's since risen, of course. So many people have missed this because they think it is overdone.
You got it. A lot of people have missed it, and that's how it goes sometimes. No trader, no person can catch every trade. For decades, I don't want to use the word years because that's not accurate. For decades, the gold bulls lamented that, oh, this is going to happen, I've got to own it, and it didn't pay interest. The stock market went up crazy over those many, many, many decades, and you were stuck with gold that just basically sat. And don't get me wrong, it made money, but it didn't keep up with other investment areas. It didn't compound because it doesn't do that. Suddenly it's come alive under the Trump administration for the reasons that I said. I think it's the basing of the gold. I think it really began over a year ago, and I think it's going to continue. I wouldn't be surprised if your currency just keeps moving higher, because where are we? We're in the cycle where in America we're looking to cut rates, and you're in the cycle in other countries where they are now worried, what do they do to control inflation as the economies are picking up, as their stock markets are moving out, and you're at that play now, and America's at the other play.
All right, let's turn to earnings. Of course, we got Microsoft, Meta, and Tesla after the bell. What did you make of that? Clearly, there was a focus there, particularly on that CapEx spend.
Okay, before I do that, let me go back to gold with you just a minute. If you're going to trade, at least use a call, not a futures contract. And the reason is, when it corrects, can you withstand it? Now going on to the earnings. Basically what we saw today was proof that the AI is for real. Yes, you'll get companies that come out like at first on Meta when the earnings came out. Oh, we don't like that. Instead of 110 billion they're going to spend on the capex now, they're going to be 115 to 135, and there's a whisper number of 150 billion. But each company is saying, with one reason, that they have to do this because the demand for the AI products are so strong. At the same time, Andrew, we're seeing company after company all over the world. Those that have embraced AI are starting to let people go, be it Amazon, Pinterest. I can go on and on down the list. We're seeing this, and we'll see it in the oil companies and other areas. And the reason is at first, AI is disruptive to labor. Afterwards, it creates jobs. There's a cycle with this. And that is the phases of the cycle that you have to pay attention to. The first thing is the savings. We're already seeing companies that get punished because they're spending too much on capex and not giving enough back to the investors. However, the investor better understand that if they don't spend that money on the capex and keep up with the competition or get ahead of the competition, what is their business really about? That is where you're at in this whole thing. I hope that the listeners here have tried some of the Copilot or the Gemini or whatever the name you have, wherever you're at, out. I use it, and I can tell you it's monstrous in its savings in time and efficiency. It's not always accurate. You have to do some double checking, all right? Don't just take what it tells you on face value. Double check it somewhere. But you will find that you get some pretty good information very quickly. It's displacing people, no question about it.
Yes, it is revolutionary, as we're seeing at a pace. Ira, great to get across your analysis. Thanks for joining us from Linn & Associates.
Thanks for having me.
Let's turn to the local market then, ahead of the open. And it's a pretty flat opening expected there, as you can see, down just 4 points. That's pretty much reflecting what we saw on Wall Street too, which was not a lot of movement post that Fed decision. And we're going to get across a number of production reports today from the resources sector. So stay with us for that in just a couple of minutes when we get across the open.